when a company gets listed, it has distributed shares and taken money, right? Now, when the company has enough money by themselves, they say to the shareholders, okay, you give me my share back, you take your money. The reverse activity of an IPO is a share buyback. My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment. And it is my commitment to make sure you get all the support that you need to walk and achieve that destination. Share buyback. What is a share buyback? A share buyback is simply the act when a company issues, the issuing company pays the shareholder. So let me make it first simpler for you rather than reading the terminology. When a company gets listed, it has distributed shares and taken money, right? Now, when the company has enough money by themselves, they say to the shareholders, okay, you give me my share back, you take your money. The reverse activity of an IPO is a share buyback. So when the issuing company pays the shareholder the market value per share, or maybe more, and reabsorbs the portion of the ownership that it had previously distributed amongst the public and private investors, is what a share buyback is. So there are goods, bads, and ugly of a share buyback. The goods is the company has enough cash flow, means financially they're strong. The company thinks the share is undervalued, which means they want to buy it. Just like an investor, they think I should be buying more shares of my own company. And this also boosts the earning per share. The bad is, it could be that they're doing this because they don't have any ideas left. This mostly is not a bad, because when this is the case, when the ideas are not left, people, companies or corporates typically, rather than doing share buyback, they do dividend distribution, which is why I'm not a big fan of investing in companies which give high dividend. And it also gives a wrong impression of because it boosts the share price artificially, it could be a wrong, misleading figure. The ugly side of it is in some cases, the earning per share of the management is linked with the compensation is linked with earning per share. Because this boosts the earning per share, the management makes more money. So it creates a conflict of interest. And sometimes they take a loan and then they do the share buyback, which is a strict no. These are the things to look at in a share buyback. Now we're going to analyze the share buyback of a certain company, and this company we're talking about is Infosys. So what you might not be able to read, I'm going to read for you. Let's see if you can read this. No, you won't be able to. So Infosys has approved a share buyback of 9,300 crores. And here is the amazing thing. They're doing this at a 30% premium over the current price of the share. 30% premium. Isn't that crazy? So whatever the price is, 30% higher, they're willing to buy the shares from the general public. And 1% worth of the entire company is being bought at this given time right now. That's amazing. And they also, Infosys has a policy of returning 85% of the free cash flow to the investors through dividends or share buybacks over a 5-year period policy. So this is the policy they've created. If you look into the past trends, in September 21, they bought 9,200 crores again at 1750 per share. But at that time, the premium was only 2% over the market price. So So agar 100 rupees is the market price, they were buying at 102. Right now, if the market is at 100 rupees, they're buying at 130 rupees. So 30% extra dene ke liye they are willing. Similarly, 2019 and 17, they offered 0.5% and 3% premium to the market price during the buyback offers. So they are aggressively doing the buyback since 2017, 19, 21 and 22. The only year they did not do a buyback was 18 and 20, effectively, in the last 5 years per se. And 85, so the good part here is we saw the ugly thing here, ki using debt for buyback is a strict no. Their policy is 85% cash flow se hi ye buyback karenge. So doing this is going to help the stock price. The ownership will be going back to the owners. That's one. It will decrease the pessimism in the IT sector that has happened right now. And the it obviously shows the financial strength of the company, that they are so cash rich that they're using this money to buy back their own shares. So certainly a very good aspect to understand and see how share buybacks work. Now the question is, what is better for you, a dividend or a share buyback? If let's say you're an owner of Infosys, should you take the share buyback or the dividend? It should be the share buyback. It is better. Are we planning for Infosys investment on the buyback opportunity? So the buyback only comes to people who are existing shareholders. We have invested indirectly in Infosys through the IT Nifty IT index. So we will not be participating in the share buyback. If any of you have invested in the Infosys share buyback, then I suggest you can exit using that, because one, you're getting a 30% instant premium on the price of the share, which is a wonderful opportunity. You'll make more money than you can. And had you received the same amount of money through dividend, you would have had to pay the full tax on this. But share buyback, you're paying capital gains, which is only 15 or 10% depending on how long you've invested into this. And Infosys being a blue chip, many people, I'm sure most of you might have invested in that stock directly. So this is an opportunity for me to tell you that you should take the share buyback and exit out of it. It's a great company, but you might be able to find the company at a deeper discount, or just staying invested in Nifty IT would be a better idea, and getting a good exit on the existing investment. A perspective for you, 1850, the price at which they're doing the share buyback is the all-time high of the share as well. The share currently is at 1400. So you're in a way getting the exit price of the all-time peak. If I was you, I would take it.